Good morning, ladies and gentlemen. My name is Ryan Souter. I'm one of the senior investment managers here at Sharewise, and we're here with Tom Quinn, the non-executive chairman of Nagambie Resources. Tom, thank you very much for offering your time up this morning to answer a couple of questions on behalf of myself, Sharewise, and obviously the participants in the webinar. Ladies and gentlemen, I'm going to kick this one off with a couple of questions. I've come up with, followed by a couple of ones submitted by you. And again, if anyone has a couple that they come off the top of their head, please feel free to submit them through the Q&A function on Zoom. Now, before we get into it, Tom, is there anything you'd like to start us off with?
Oh, look, Ryan, thanks for the opportunity, and it's a pleasure to be here. We're pretty excited about how we've refocused and gone forward and having this our maiden resource statement out in the market and be able to articulate where we're heading. So thank you for the time.
Really good to hear. Okay, let's just jump straight in. So, Nagambie recently announced the discovery of gold and antimony. Can you tell us more about this discovery?
Thanks, Ryan. Look, we're actually quite excited. Like as everyone knows, geologically we're in the Melbourne zone, so the Nagambie resource in that. It's adjacent to obviously the better known Bendigo resource, which is the historic goldfields of Victoria, very nuggety and in its structure. Whereas we're in the Melbourne zone, and we've been able to demonstrate clearly that ours is more a finely disseminated gold in the Melbourne zone. Our discovery is 100% on our own mine site. We own the site. We've got two legacy open pits that produced and what we call the east and the west pit, and they produced 135,000 ounces in the past during the 90s. The lode systems we've discovered are sort of underneath what we call the west pit, and they're different orientated structures of what's previously been mined in the shallow pits. To date, we've identified four mineralized lode systems, each with their own vein systems and domains. We think we've only scratched the surface. We're 250 meters below the surface, but in the district we've seen some of these lode systems go to 600 meters.
Okay, well, that sounds very positive. So thank you for that one. Now, so Nagambie has advanced the project, and last month you guys released the Maiden JORC Inferred resource. Can you tell us more about the Infrared resource and how you might continue to further develop the project moving forward?
Yeah, Ryan, look, the resource that we announced was based on a drilling program of only 41 holes, and these holes intercepts were based on calculating inferred resource that we've called at 415,000 tons. It averages at 11.5 gold grams per ton of gold equivalent, of which it breaks down to 3.6 grams per ton of gold and a 4.3% antimony deposit. So our maiden in-ground metal content, if you like, is 153,000 ounces of gold equivalent. Again, breaking that down to 47,800 ounces of gold and 17,800 tons of antimony. It's modest at this stage. So there's much potential to grow this resource based on what we've found so far. So the follow-up drill program, which we're very articulating in our statement to announce to make sure, we've focused that very much on infill and near extension drill program on their discovered lode systems. We see that this will improve the quality of what we've announced, but also increase this significantly. We believe it could increase the resource by up to 2 times. Beyond this modest program we've announced is that we see there's a real potential for further step out in depth drilling in mineralized structures that could probably lead to intercepting other lode systems under the other pit of the mine site, with the east pit, or to strike down to the southwest of the west pit.
Okay. Well, thank you for that clarification regarding that one. Now, Victoria is generally known as a difficult place to establish a mining operation. How does Nagambie Resources see this, and how do you see that you're going to obviously bypass the potential limitations you have of being located in Victoria?
Look, we appreciate and understand that Victoria, approvals and permitting are sort of cumbersome and subject to a lot of, regulatory regime. But we're Nagambie Resources, we have a different perspective of that, mainly because, in our case, we own the freehold land of where the discovery is and the adjacent land as well, where the discovery is. We have a mining license to operate over the mine site. So it gives us a huge advantage over other exploration companies. And we've been working with a JV partner, and together we've been granted all the permits, including for tailings, to develop a toll treatment facility on the site. So we think this separates us and adds a lot of value to our discovery with a tangible path to production.
Okay. Well, certainly does separate you guys. Now, can you tell us a bit more about antimony? Obviously, we don't hear much about it. Obviously, the main focus is obviously, in the commercial market space being gold. But why is this metal so important strategically, and especially in the energy transition moving forward?
Look, antimony is a critical mineral, spoken in the same terms as, say, lithium, nickel, and cobalt. It appears on critical minerals lists in Australia, China, United States, European Union, Japan, Canada. So it's a well-known in that context. However, unlike lithium, there's few economic deposits of antimony around the world. Australia has one significant one in the producing mine at the Costerfield, which is operated by Maiden Resources, a Canadian-based firm. That mine is only 45 kilometres to the west of Nagambie. China and Russia control the supply of antimony. Like many other critical minerals, it's mostly antimony ores that are sent to China for processing into ingots or oxides. Of course, due to geopolitical events and diminishing reserves in China, we've seen the supply of antimony fall in recent times. And of course, this has resulted in the price increasing up to 70% in 2024 alone. So there's a strong demand for it. Of course, that we actually believe that demand will increase with its use in solar panel manufacturing and into the defence industries. So two areas where we see market growth in the foreseeable future. So we think that also remains strong. I guess given that there's relatively few antimony mines producing globally, we don't see a situation where there'll be where supply can easily be increased to significantly affect its price, unlike what we've seen probably in lithium and other critical minerals. And so because of the mining production restrictions, it's mostly occurring in China, and the fact there's really only one antimony mine in Australia, we think the case for antimony is probably not well understood by the market, and we see that will change and strengthen and in the time frame in which we develop the resource.
Okay. Now, on that basis, with antimony appealing to be attractive under certain physical conditions, and obviously, prices tendering to lead on the upward side for the foreseeable future, do you see Nagambie shifting their focus from the gold on the site to the antimony, or will it become a multi-purpose site? Like, is there a potential for Nagambie to become a market leader in the antimony space?
Look, we'd see gold is very much the resource. So we think what we've drilled so far is at the upper level. So that was probably antimony rich. So it's certainly an important element of our resource. But we think as we drill further, we'll probably get to more traditional sort of gold bases as well. So it needs to be both, I think. We have the potential for both. And so we're still very focused. And of course, we've got gold at record prices at the moment as well. So quite a focus.
Well, thank you for that clarification, Tom. Now, so it seems to be an exciting time for Nagambie. Can you do me a favor and just briefly summarize the top 3 reasons why investors should increase their allocations or get into Nagambie? Sure.
Well, I guess we've been on the front foot to make sure that we have a clear Maiden JORC inferred resource announced, so it's clear what we've discovered through this very first step of a really modest program. And we think because we're only 250 meters depth, we've only scratched the surface. So the modest program we've proposed in our follow-up is that will significantly increase the resource probably by 2 times. I guess unlike other resources, it's on freehold land with a mining license over the discovery. So the legacy mine site is an ideal place to develop and have a path to development for mineral processing development of the mine. And we think also the market is yet to see the investment case for antimony. So the flavour of the month of what other critical resources is certainly there. We think antimony will grow, and so we see some dynamics around that. So it's around a clear resource, a modest program to significantly increase the resource, a site that we have full control on to be able to do what we want to do in terms of production or exploration and production, and then also a growing awareness of the market of the value of antimony, which we clearly have a path to develop. Pretty exciting times, and so we've focused our business and our conversation around business around that exactly.
It does appear to be very exciting. So thank you for that one, Tom. Now, that wraps up my questions. I'm going to pivot here to a couple of questions submitted by participants previously. Now, moving forward, with a proven resource yet little working capital, would Nagambie be potentially at risk of takeover?
I guess on at a high level, that certainly would be a case. We're not focused on that. We're really focused on where we want to go with our resource development. Our drilling program is, like I say, a modest one. We think we can implement that in a sort of $1.5 to $2 million of value. So we would get to add a lot of value. Our goal is very much to add value to the resource we have, and then hence add value to the business and the shareholders through that.
Of course. Now, would you be able to quantify for us how much the JRC mineralization is worth in the ground currently? Now, I did speak about it previously, but if you could just provide us with a little bit further clarification.
Sure. Well, look, as I mentioned in the volume that we've discovered and the process we've gone to make our first resource statement, we've taken a very conservative model. Of course, you add into that, so the 153,000 ounces gold equivalent, and taking that and then breaking it down into the gold element and then the antimony element. So we basically worked for that calculation. If you went on pricing today, which again is record pricing, we're sort of taking a view back a little bit from that. Typically what gold's well over 3,000 right now, and we think 3,500 probably Australian dollars, and antimony probably 25,000 Australian dollars per ton. So it's quite a factored calculation, but we probably think it's north of $60 million of known resource in the ground.
Okay, well, that's obviously very exciting. Now, what relationships or partnerships does Nagambie see occurring with Golden Camel in the near future or over the next 12 to 18 months?
Yeah, certainly. Well, we've been fairly clear. We formed a joint venture agreement with Golden Camel. That was a great pathway, again, given the advantages of the site in terms of having an existing mining lease that we could build to a production facility. Golden Camel bringing in capability and other potential resources to feed a toll facility. So we formed that joint venture years ago. That joint venture is still in play, and it's really reliant on Northern Golden Camel being able to develop and fund the facility in a parallel while we're developing our resource. So that relationship we see as important and quite a fruitful one as the two companies develop, and we have an immediate path forward as soon as that's funded for us to go to production, either on a toll facility basis from other sites or from our own resource should it be developed sufficiently by that stage.
Of course. Now, with the relationship with Golden Camel, is there a certain termination point for the ending of the partnership, or is there a state where a position where the program gets to a certain point and then the partnership is over?
There's certainly in the joint venture agreement for both parties. There's triggers to end, or either be time based or other elements based. But our ambition is that becomes a fruitful joint venture and a production facility, given the strengths we have on the site, being ready to go. So we see it as a clear advantage, albeit there is alternates depending how our resource develops independently of Golden Camel.
Of course. Now, do you currently have funding to recommence drilling? And if not, where do you see it coming from?
Yeah, very good question, right? So currently in our cash position, we don't have funding to commence the drilling. So we're actually talking to a lot of people in the market in terms of their interest in helping us develop that. It's not, as I say, it's a fairly modest program that we think can significantly increase. So we think we should be able to implement that fairly quickly. We're pretty confident that we'll be able to raise the funding in the market with the various people that we're having conversations with. But we see the platform is that we have a resource statement, we have a drilling program, we have a site where it can develop. So we think that attracting a fairly modest amount for the next drilling program is quite achievable for us and be able to achieve it fairly quickly.
Of course. Now, regarding raising the funding, do you see being able to do that off market, or is there potential to need to cap raise on the market, before the end of the calendar year? Any market indication?
Yeah, we're certainly open, but probably more likely off market at this point. Is that we would see how we go with that.
Of course,
we're open to either.
Okay. Well, thank you for that clarification. Now, probably just the last one from me here. So if any participants would like to submit any last-minute Q&A questions, please do so. Now, would you be able to just give us a brief timeline on the strategic plan moving forward for Nagambie over the next kind of 12 to 36 months?
Yeah, good. Look, Ryan, the key element for the platform for our path forward was we took a view early this year to refocus the business on the core resource. We got the first step of that done in May with the inferred resource statement, and then we can use that now to leverage us, as we talked about, is to raise funding, get the next level of the drilling program happening, and we've already articulated what that is, so it's very clear. So the near term is about that, and that then would sort of help us develop where we go next, is in terms of extending that drilling program, enhancing that drilling program over the next 2 to 3 years. We think there's, depending on how that goes, there's of course an opportunity for us to develop a exploration decline, which we've got a concept of, and that would continue to is probably the key option or the current option for us to develop the resource further, and of course head into a mining operation in the next 3 to 5 years, or supporting that. Parallel, of course, as we talked earlier, was the Golden Camel opportunity and how that might evolve or not in the next time, but we see that as a very positive step and a quick and a clear path for us to production. So short term, get drilling; longer term, use that drilling, develop the decline, develop the resource. That's our strategic intent, and we think that this next step will attract a lot more interest in us, as I mentioned earlier, in having a resource that we can develop and define and grow quickly on our own site with a clear path with the mining lease and freehold land. And of course, gold. Everyone's excited about gold. We think more and more people get excited about antimony in the very near term.
Well, thoroughly appreciate the update, Tom. We've just had one come in. I'm pretty sure in my eyes, I heard that you stated that it was 60 mil for the price of the metal in the JRRC. We have an attendee asking whether it was closer to 60 or closer to 600.
I guess I might. I thought it was 60, but I guess I'll take. I'm hoping that I quoted that correctly.
That one is all right. Well, that about wraps everything up on my behalf, Tom. Is there anything you'd like to finish us off with?
Oh, look, Ryan, I thank you, and I thank all the shareholders and people that shown interest in today. We've done a lot of work in a very short period in the last 3 months to get our resource defined and set our path forward. We believe our shareholders would see now is that there is a clear path for us to develop the resource, develop the value in Nagambie Resources. Our market forces are in our favour in terms of gold price, our non-nuggety resource, and the growing interest in antimony. So we're quite excited, albeit there's a lot of work to do, and we look forward to continued support that we get.
Thank you very much, Thomas. Really appreciate your time, and thank you very much, Nagambie, for giving me the opportunity to work with Sharewise. Always appreciate it. Now, this one has been recorded and will be uploaded onto the Sharewise YouTube. So if any participants that would like to rewatch it or distribute to a fellow shareholder, feel free to do so. Thank you very much again, Tom. And ladies and gentlemen, enjoy the rest of your day. Cheers.
Thanks, Ron.